Hello viewers, welcome back to my channel. The stock market has kicked off 2024 on a positive note, with the S&P 500 showing signs of strength. This upward momentum has sparked conversations about the potential for a continued bull market, with some analysts even predicting the index could reach 6,000. While such a rally might seem ambitious, several factors suggest it's not outside the realm of possibility. The current economic climate, despite its challenges, presents a unique backdrop for market growth. Inflation, although still a concern, is showing signs of easing. This, coupled with robust corporate earnings and a cautiously optimistic investor sentiment, creates a fertile ground for further stock market gains. However, it's crucial to remember that market predictions, even when backed by data, are not guarantees. The path to 6,000 or any market milestone is rarely linear and is often fraught with volatility. Investors must remain vigilant, adopting a balanced approach that combines optimism with a healthy dose of caution.
Recent inflation data has provided a much-needed boost to market sentiment. The Consumer Price Index, or CPI report, a key indicator of inflation, has shown a consistent downward trend in recent months. This suggests that the Federal Reserve's efforts to combat inflation through interest rate hikes might be finally gaining traction. Lower inflation is generally positive news for the stock market. It eases the pressure on businesses to raise prices, potentially boosting consumer spending and corporate profits. Moreover, it gives the Federal Reserve more leeway to slow down or even pause its interest rate hikes, which is typically welcomed by investors. The cooling inflation data has injected a dose of optimism into the market, fueling the belief that the worst of the inflationary period might be behind us. This positive sentiment, combined with other favorable economic factors, is contributing to the bullish outlook for the S&P 500.
Three key factors are driving the optimistic forecast for the S&P 500. The potential for lower interest rates, strong corporate earnings, and improving investor sentiment. First, the Federal Reserve's aggressive interest rate hikes to combat inflation seem to be having the desired effect. As inflation cools, the Fed might consider easing up on further rate increases, which would be a boon for the stock market. Lower interest rates make it cheaper for companies to borrow money, potentially leading to increased investment and economic growth. Second, despite economic headwinds, many companies, particularly those in the S&P 500, have reported strong earnings. This demonstrates the resilience of the American economy and the ability of corporations to adapt and thrive even in challenging times. Positive earnings reports tend to boost investor confidence, leading to increased stock purchases and driving up market indices. Finally, investor sentiment, while still somewhat cautious, has been gradually improving. This is evident in the increasing inflows into equity markets and the declining volatility index, also known as the fear index. This improving sentiment, fueled by the positive inflation data and strong corporate earnings, is further contributing to the bullish outlook for the stock market. The combination of these factors creates a compelling narrative for a potential bull market. However, investors should remain aware of potential risks and uncertainties that could derail this optimistic scenario.
Navigating the market tips for investors. For investors considering entering the market at this time, here are a few tips to keep in mind. First, do your research. Thoroughly research the companies you're interested in investing in. Look beyond the hype and focus on their financials, competitive landscape, and long-term growth potential. Second, diversify your portfolio. Don't put all your eggs in one basket. Spread your investments across different asset classes, sectors, and geographies to mitigate risk. Third, think long-term. Avoid making impulsive decisions based on short-term market fluctuations. Instead, focus on a long-term investment horizon that aligns with your financial goals. Fourth, start small, invest regularly. You don't need a huge sum of money to start investing. Consider dollar-cost averaging, a strategy where you invest a fixed amount of money at regular intervals, regardless of market conditions. Fifth, seek professional advice. If you're unsure about navigating the market, consider seeking advice from a qualified financial advisor. They can provide personalized guidance based on your individual circumstances and risk tolerance. Remember, investing in the stock market involves inherent risks. It's crucial to approach it with a well-informed and disciplined approach, staying focused on your long-term financial goals.
Conclusion: is 6,000 the next stop for the S&P 500? The S&P 500's potential rally to 6,000 is a testament to the market's ability to defy expectations. While challenges remain, the confluence of cooling inflation, robust corporate earnings, and improving investor sentiment creates a compelling narrative for continued market growth. However, investors must remember that the market is a fickle beast, prone to sudden shifts and unexpected turns. Prudence, patience, and a long-term perspective are essential for navigating the market's unpredictable waters. So the question remains, will the S&P 500 reach 6,000? Only time will tell. But one thing is certain. The journey to that milestone or any other will be filled with both opportunities and challenges. What are your thoughts on the S&P 500's potential to reach 6,000? Share your insights and predictions in the comments below.